My current portfolio is sitting at $9,091 between stocks and options. I do have about $7,000 set aside in cash for when there is opportunities in the market. Right now, I have not found those yet, so let's go ahead and take a look at my current holdings. I'm also going to be showing you guys the performance of time of the portfolio, so stay tuned for that as well. Now, the first one is going to be Booking. Keep in mind, I'm investing in this portfolio of companies that I can understand their business model, that have some sort of moat, and that I see potential for the share price to increase in the future. My average cost is $162 for Booking Holdings. I have 10 shares, which is about 17% of my portfolio, and it's giving me a total return so far of about 4%, which is $80. Now, next up, I had to follow the president with his stock picking. Of course, ServiceNow, it is a company that I didn't really understand until I started digging more in the company. I was more of a CRM investor. However, I ended up noticing and getting informed that CRM and ServiceNow actually, while they do almost the same thing, they really don't. They're completely different in terms of how they resolve problems for a business and what they do for businesses. It's almost like the nervous system of a business. As you can see, I only have 2 shares. My average cost is about $105.65. It equals to 2% of my portfolio. I am currently up 26%, which is about $56. Next up is going to be Home Depot. I have done a lot of research in this company. The reason why the stock is down basically is because, of course, since it's a giant, the growth isn't all there and everybody just wants growth stocks now. Not only that, what's happening with the housing market and everything being so expensive, new homeowners not being able to buy homes, there isn't a lot of demand for DIY projects and stuff like that at Home Depot, which is a lot of the sales. Also, most of the sales is to like contractors, that sort of people, that sort of business that buy a lot from them to either build houses, remodel them, and etc. As you can see, I have about 6 shares, which is almost 20% of my portfolio. I have to reduce this a bit or find another stock to invest in to diversify a little bit more. I am up about 2%. Another stock that I wish I had invested more in is going to be Mercado Libre. The reason why I didn't invest more is because they have this sort of like Affirm or Credit Karma type thing with those customers where they can buy with Mercado Libre's credit and they have a lot of debt. However, I do see them paying, but since this company is in Latin America, the consumer doesn't really, there isn't that much safety in terms of when the credit checks are happening. So that's why I wasn't that confident. I only invested about $500 in this company, which is a total portfolio diversity of about 5%, only 0.32 shares, which is up about 7%, around $36. Now, one of the most hated stocks in the market is probably Nike. They're sitting at $45.92. My average cost is $43.88, which is 15 shares at about 7% of my portfolio, and I am up 4.63%, which is almost $30. Now, keep in mind when I say I am up, I'm not like bragging or anything like that. This is nothing. This is pennies. I hope this stock crashes like $10 more so I could buy a lot more. This is just my initial starting position. When they release earnings once again and I see that the earnings are better or there is more growth or whatever, etc., then I might invest more. Even though if my average cost goes up, I don't mind that at all. But I mean, Nike is a powerhouse, man. Nike is everywhere. They just got to get their stuff together. They got to stop firing CEOs and just get the stock up already. Now, right here we have S&P Global, which is pretty much a monopoly. They have Carfax and stuff like that. I'm going to do a more in-depth videos on each company to explain a little bit more what they do, but I only have 1 share. It's just a starting position of about 4.35%. I'm up 2%, which is about $11. Not much to say here. Same thing for JP Morgan Chase. I only have $1 at 1 share at an average cost of $296, which is 3% of my portfolio. I want to be buying this company below the $300 mark, but I don't want to go too crazy, because everything just seems expensive in the stock market. 40% of S&P right now is all like Meta, Google, and all AI plays. So I'm being a little bit careful. I have some cash on the side to see if there's maybe some opportunities in those bigger companies. I believe right now the only ones are like Meta and Microsoft. Don't take my word for it. Do your own due diligence. It's just what I think. This is pretty much nothing. I have a 0 to 3 month treasury bond that's yielding me about, I think it's like 3 or 4%, something like that, that it gives you. I have 15 shares, which is about 15% of my portfolio. This is just to have more cash earning interest. I also have all of my cash in Robinhood Gold, which also pays me interest, but this is just part of the portfolio for now. Like I said, I'm looking for opportunities to invest in. Next up, we have American Express, which my average cost is $317. I have about 5 shares, which is 16% of my portfolio. I am down about 1%, which is $11. I do plan to add heavy if American Express goes below the $300 mark. However, don't take my word for it. Like I said, do your own due diligence. And then last but not least, my worst investment of all time, Qfing Holdings, is a Chinese company that the numbers are great, but of course, since everything that's going on with China, it doesn't reflect on the stock. My average cost is $43. I have about 10 shares, is only 1% of my portfolio. I am down 63%, which is about $278. I don't plan on selling this company because it does pay me a dividend. And however, Chinese stocks are undervalued extremely right now, so I plan to keep it in the future. If it goes up near or above my average cost, I think I'm just gonna close it, because this isn't the first time that I've gone through this with a Chinese company, so I don't want to really go through it again. It's just too much political stuff that I don't want to get into. And then of course I own a little bit of Bitcoin. My average cost is $84,000. It's about 7% of my portfolio, which is a little bit high. I want to have this with 5% or below, and it's only about $719, losing me 14%. So I'm losing around $121. Now, as you can see, this is my individual portfolio, currently sitting at $25,000. I am extremely proud of this, even though it might seem like a small account, but I have been building this up little by little. If we take a look at the all-time results, you can see I'm up 46%, which is nothing terrible. I think I've done really well. I'm still learning. I'm still learning to evaluate companies and pick companies. That is a price increase of about $8,000. And as you can see here, I have about $15,000 in cash. These I'm going to be using to sell puts on company like maybe SoFi and NU, which I find very interesting. I still don't know yet, but I'm also sitting on the sides with a lot of cash to see if maybe there's a bigger opportunity in the market, or if something happens, I have cash ready to go. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next one.